Good afternoon, everybody. Wednesday, October 8th, all-time highs. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same. Right. Yeah, so, all-time highs. New all-time highs. Spies. Oh, look at that. It's even like a little bit of realized volatility compared to what we're used to. We broke the 0.5% mark. 0.6% green on the day for the SPY. Qs almost 1.2% on the day. Really strong. And the IWM a full percentage point. So strength across the board. Qs were the real leadership. It was AI, it was AMD. Qs were the real leadership, but there was strength across the board. Um, TLT was up a lot more at a certain point today. So this finished up small. So interest rates down a little bit. The dollar has been accelerating higher here, up another 0.25% today. The CUP ETF is really breaking out. That has not had any impact on the stock market. We discussed this a few days ago. It's not just the price of the dollar. Generally speaking, a higher price dollar will negatively impact stocks. It's the reasoning behind it, and the reasoning behind it is just more like global stimulus, uh, particularly coming from overseas. So it's more of that like inflationary story bringing the market up, but it's also strengthening the dollar. But that's outweighing the global easing is outweighing any weakness that could come in from a stronger dollar to U.S. equities. And it's the same thing with gold. GLD up another 1.5% today. This GLD is like starting to go parabolic on the daily chart, which is pretty notable. I've been out of it. I've been out of my long for the last $22. And the trend, you could just see that here on this daily chart. This trend is starting to accelerate to the upside. So that is notable. Bitcoin finished up 1.4%, but it was an inside day. Ethereum kind of not great, only up 0.6%. Solana was up 3.3 though. And oil today was up 0.5% and is still in its range. So bringing things over here to the market, we just had an incredibly strong day today. I'm not surprised to see it after yesterday, right? So we had this whole afternoon meeting yesterday where we were talking about how yesterday it was a down day. It was just not enough. It was not enough. We didn't get the market closing on lows with the VIX closing on highs to make me confident for a gap down for today's trading session. That's what I really wanted to see yesterday, earlier in the day when the market was a little bit weaker on that Oracle news. Was can we close on lows and then gap down with the VIX gapping up? Maybe that creates a VIX squeeze. Maybe that creates some more systematic selling to eventually come in the market. But to close yesterday, my conclusion was that it was not enough. So given that they tried to sell the market yesterday and it was not enough, I'm not overly surprised to see that they bought this market back up today, to be completely honest. And I'm starting to go more and more in the camp of what you hear Bill Kay say in the VTF a lot, which is first up, then down. Uh, my thought process behind that, at least, is the thing that I've also been noting here over a month, probably all August also. September was the strongest September in 15 years. October is off to a phenomenally strong start. Yet this market has not hit any extreme upside extension at all. And to me, if anything, that's concerning. Can the market break this uptrend to the downside, this grindy uptrend to the downside without breaking it up first? Yeah, it could do that. I had a chance to do that a couple weeks ago, that week when I was in Chicago, towards the back end of September, when we were in our, 2 weeks of most seasonal weakness for the year, but it didn't do that. We pulled back like a 1.3%. It wasn't enough. trend held. We had a challenge trend that was the best we were able to get. We had some potential yesterday with the close near lows, close, but that was just on the ADMA, right? Close on lows, but just on the ADMA. It's some potential there yesterday, but it wasn't enough. And when I look at the strength on a day like today, I'll be honest, the strength to me today feels nonsensical. Um, it's AMD again, and when you're looking at the option flow in AMD, you go, holy cow, the bull flow in AMD was off the chain today. We were seeing 265 calls, 300 calls, 320 calls. Maybe there was 350 calls in there, on size going off during the day. So this is the new, hot name that's gamma squeezing higher, that's holding up the entirety of the market. It seems like every single day there is the name, right? There's a name that is just ripping this market, holding this market higher, and continuing to cause the index to keep its upside grind, even when other things don't look that great. Today it was the AMD story, and when you look at that option flow coming in, does this have the capacity to just implode on itself? Or I think that Charlie McElligott line is fall by the weight of its own delta or something like that. Yeah, it does, but today's technically only a day one. Um, uh, it's trading at $237 with the ADMA at 193, but it's technically only a day one. And when you got option flow coming in like that, I've learned you don't want to fight that until it gets like so, so, so extreme. And even then, you really don't want to fight consistent, out of the money, heavy bull flow, because that's what just causes these names just to continue to squeeze and squeeze and squeeze. And when you have AMD up 12% on the day, good luck having the Nasdaq close negative, even just from AMD alone, even though it's not technically a Mag 7 stock. And the Q's closed up 1.2%. And when I'm, back looking at the technicals here of this market, I'm almost wondering, look at gold, right? Gold beginning to go parabolic here. I'm almost wondering if you actually need that to happen from the market in order for it to go down. Have this market break out to the upside, create a parabolic upside move that becomes unsustainable. Ideally, you're seeing the VIX move up with it, which is one of the problems again today, was that the VIX crashed back down. Maybe crash is a hard word, but the VIX pulled back down pretty significantly, back below 17 today. So we'll see, but we got a close on highs, with AMD closing on highs, continuing to move up after hours, and just a massive amount of bull flow coming in. And the indexes here show no sign of being ready to pull back, with a new all-time high close today. I would still know, and I'm almost starting to get nervous about it actually. Most of the Mag 7 stocks have not been participating and don't look great. Most of them, not all of them, but most of them. And why am I starting to get nervous about it is because up until probably 2 hours ago, I was viewing the weakness in the Mag 7 stocks as a signal that we could lose the entirety of the market. Like, wow, look at the weakness in these Mag 7 stocks. They really don't look good. They're relatively weak. Like, maybe these things roll down and bring the market with it. Now, I'm almost starting to think that the opposite's a possibility. That if this market goes into parabolic up move, the Mag 7 names that have not been participating capture a really big bid, and then obviously market cap weightings that could easily get the SPYs and the Qs to break out to the upside and actually finally show us some extreme upside extension. And then you could actually see if that, becomes the beginning of the end. Even as I scratch my head here and wonder where all this money's coming from, that's continuing to push this market up, because, you know, it's not coming from the systematics, it's not coming from the buyback. The gamma is insulating of moves. It's not forcing the market higher. But we saw a note. I think I posted in the VTF this morning that retail bought $100 billion worth of stock over the course of the last month. And in that note, it said that retail usually, and I don't know about this statistic as something that would be consistent moving forward, but it noted that those heavy retail inflows usually last for like 6 weeks at a time, and we're like 4 weeks into it, like 4 or 5 weeks into it. So heavy retail flows have been coming in. That's been pushing the market higher. And I would assume that there's been some additional buying that's coming in from the institutional side as well. I'd love to see that Goldman Sachs like sentiment positioning indicator thing actually get back to zero or get back to positive, because that's still actually in the negative. So, it's a retail world. Retail's dominating the stock market. They're dominating the performance and causing the market just to continue to squeeze up. So, yeah, definitely today is also technically just a day one with this market, right? I don't know. I feel like we might break higher and squeeze over the course of the next couple days. So we'll see how much we gap up tomorrow. Sure it'll be a gap up because I can't remember the last time we had a gap down. And we'll kind of take it from there. So that's at the index level. As far as individual stocks go, we can take a quick look at these Mag 7 names because, like I said, most of them don't look great to me. Even Apple, which I just typed up first here, which does look great to me, it still hasn't really participated in the same way as the Qs have. This month. It's obviously creating a super big bull flag here, but still hasn't actually gone. Right. So what you're saying there, TG, is actually what I was just talking about before. Like my fear as I was looking at the market in the last hour or two is that these names actually start to catch up and break out. And we I guess where I'm coming from that is that we started to see a little bit of that today, and that could be the thing that actually drives the Qs and the spies to really break out and see upside extension, because that just has not happened today. So maybe I didn't make that point clear. But Qs, in this upward channel, we'll see if they break to the upside, as maybe you're beginning to see some Mag 7 participation when it's otherwise looked really bad. But Apple still in its bull flag, but otherwise hasn't been able to continue. But Amazon was able to get above 224 today, so Amazon with a decent day. Meta was able to bounce back a little bit further, but that daily chart still doesn't look very good. Uh, you know, Microsoft, like, that's not a good candle today, considering what the Qs actually did. And Apple, honestly, it's not a great candle today, considering what the Qs actually did. Amazon's is pretty good, but I know that Google's wasn't great either. Google finished red on the day, and that chart looks kind of crappy. Tesla finished positive, and I guess it made another tail and held support, but Tesla almost seemed like it was, when it was moving up in spite of itself. Um, Obviously, you've got NVIDIA, and I don't really know what the FNGU is composed of. I don't know if it's just those seven stocks or what. But obviously, you got NVIDIA. NVIDIA is kind of the same deal. It like, I'm saying the same thing every day about this NVIDIA. You can't look at this daily chart and say that it looks bearish. And honestly, this thing could bust through 190 tomorrow and regain its normal momentum and get to 205 in a hurry if it breaks out. But we still haven't seen NVIDIA really act like the old NVIDIA in quite some time. And I guess that's my fear, is that all of these actually start really going and charts look better and the money starts flowing into these names. Apple bull flag breaks out. Meta's bounce, oversold bounce continues to its 21 EMA on the daily chart. Microsoft goes for another leg after taking 2 rest days. That's more my fear. But honestly, overall, most of these names are not participating. AVGO had a good day today, but it's still in its range. So we'll see. FNGU. I would like to. I've never actually looked up the um they call it Fang Plus, the Fang Plus ETN. I've never looked up what it's actually composed of, if it's just composed of, 7 stocks, or if there's more to it than that. I'm gonna assume there's more than just the 7 stocks, but maybe I'm wrong on that. I've never actually looked it up. Because FNGU actually looks better than any of the Mag 7 stocks that I just typed up, except maybe NVIDIA, but NVIDIA didn't break out today. FNGU broke out today. So if this thing's able to really go and continue, what does that mean for the Nasdaq? So we'll see. My trade of the day, without a doubt, was this RGTI. It's by far and away my best P&L name today. Traded it great. Called out to you guys the short back through 48 at the high of the day today. So that one worked really well. But they simply break this thing. You know, we were looking at like this hourly uptrend that the thing has been in after it put in this big upside tail on the kind of the first bar of the day, and then it finally broke that hourly at like 2 o'clock or so. But still, they still kind of supported it pretty well, honestly. I would almost think that the break of that hourly trend would have this thing close on lows and have it very, very quickly be working its way down to the 80 MA on the daily. Maybe just chalk that up to the fact that the market's still closed at all-time highs. So obviously the animal spirits are very much alive here, and people are not rushing to sell pretty much anything. So maybe that was it. But still, by far and away my best name today. Ion Q had a negative day today and hit that 80 MA on the daily chart. QBT continues to be a weaker one. I think that's the one that had the secondary. QBTS had a pullback today. OKLO was a little bit weaker today. So, some of these names were a little bit heavier today after some of them had secondaries, right? JOBY had the secondary offering. IREN, which is IREN held in great, all things considered. I think they did a convertible that hit the stock down a little bit after hours yesterday, but still they're still holding these names in overall. QS was a notable upside tail. Quad U was a notable upside tail. Another failure through 18 on this Quad U. It's still holding in. Maybe this blasts off if they're able to clear that selling out in this thing also. But maybe some weaker performance actually on some of the Mimi squeeze stocks today, which maybe just actually helped to assist the rotation into, Chase AMD, push up FNGU trade that we saw, which in some ways that's more bullish for the indexes. I mean, not in some ways, it unequivocally is more bullish for the indexes if they give up on the quantum names and are rolling them into, FANG again. So it's pretty much where we're at. Happy to answer any questions. Yeah, Scotty T mentioning RGTI breaking the hourly. It did. It did. Still not the close on lows and momentum down that I would want to see from that after that break, but it did. So we'll see. Yeah, Varun also saying exactly what I was just saying. Quantum and nuclear into the safe haven of FANG. Yep, could be. Steamboat Willie on Nvidia, echoing my thoughts. I said 205. If Nvidia gets through 190 and trades like the Nvidia of old, you could see 200 plus very easily, very quickly on this thing, and that'll obviously be part of a market that's breaking out to the upside and maybe giving some upside extension for the first time in the never-ending trend. Circle Fig, great follow through on this Fig. I hope some of you guys caught this. We had been really talking about the long off the $50 base and or through 60. So Fig at 71 today. Great trade. I hope some of you guys caught that. From Anastasia, I think I mentioned this the other day, but do you have any idea what this TXSE will have on the overall market? Yeah, I think that you mentioned that in the morning meeting. So the TXSE, that's the Texas Stock Exchange, right? Just to confirm for everybody. Pretty sure that's the Texas Stock Exchange. So what impact does that have on the stock market? I don't think it has very much of an impact on it at all, to be honest. There probably will be some different listing rules. I don't know what those listing rules look like, but maybe they find some ways to make it more advantageous to list on that index to get it going and build it up, compared to listing on the more traditional ones. Um, the only possible thought that I have would be if for some reason it creates more IPO, like I think if you start seeing a bunch of New York Stock Exchange stocks or Nasdaq stocks that are already listed just switch over to the Texas Exchange, that it means nothing for the market. But if for some reason it's to create a lot more IPOs, people are willing to IPO for some reason because Texas is offering them more, then I actually think that could end up being a negative for the market as a whole. But I'm generally expecting it to be a non-event. I'm just hoping that, and I'm sure that I'm going to be wrong on this. I'm just hoping that they don't make an extra data fee, to be honest. We have to pay for access to New York Stock Exchange, NASDAQ, and Amex. Now do I have to pay for access to New York Stock Exchange, NASDAQ, Amex, and Texas? I I think that's the biggest annoyance of it actually is potentially just an extra data fee. But otherwise, I don't think it's going to be very impactful, to be honest. So, uh, we'll see though. We'll probably need a little bit more information to, we'll see as the information evolves with it. From Liam, do you mind looking at this MU long trade I took today? Sure. The name got weak and sloppy near VWAP. I know you don't use the VWAP. While the Qs were strong and pushing higher, and other semis were trading strong. Stop was around 192.20. Let me look at the chart you posted. So it looks like you bought it on the 1025 candle, the break higher on the 1025 candle. It looks like you booked a no profit on the way up, and then it looks like you got stopped out at your entry price at it looks like 125. Stop was around 192.20. 192.20. So you didn't give it to that. And I don't like how you're saying around. Should be a price. Shouldn't be around a price. How do you balance managing a trade if the setup starts to get uglier than when you first entered, but still technically hasn't failed? Sure. So happy to give you a bunch of feedback on this trade. First thing I would say is I like the entry and the reason behind the trade. I start to get a little bit nervous when you get to 10:30 and you have this much extension on a 15-minute chart. So that would be the one negative I would note about the trade itself, is that you're buying this at 10:30 with a lot of extension on the 15. But otherwise, I like pretty much everything else about this buy. The daily's a little, except for the daily's a little bit extended. So my two negatives are the daily's a little bit extended and the 15 minutes a little extended for the time of day that you took. But those are not reasons to not take the trade. They might be reasons to take less risk and less size, but they're not reasons to not take the trade. And I like the execution. So stock is trading great. It has a pullback to its ADMA on the 5. It creates a beautiful looking pivot low, and then you're buying this thing on the way up. So after the pivot's already confirmed. I would have liked you to get a little bit of a better pricing on it. Maybe a buy on the 1020 bar as opposed to the 1025 bar versus those lows, and a little bit better pricing. But otherwise, I like the trade. I like the idea. I like that you're buying it on the way up. What don't I like it about it is so first of all, the stop loss, don't tell me 192.20-ish or around. Either there's a pivot low here at 192.20, or there's a pivot low here at 192.13. The actual pivot low of the stock is 192.13. So the stop should be 192.12. It looks like you got approximately, I'll say, 193.50 as the entry price. So you're taking on $1.40 worth of risk. Let's just call it $1.40 worth of risk. The stock then goes up. Does it go up $1.40 from there? It goes up to 195.85. So you were about $2 in the money on it. And unless I missed it, I don't see a take profit dot on there. I don't see a take profit dot on there. So, and then you were still in it when it actually even made a new high. So I don't like that. You got to book some profit on your trades when they're working for you to at least cover the risk. At least cover the risk on it. Then if it goes all the way down to your stop loss at 192.12, it becomes a break-even trade, and we'll take break-even trades all day. So you gotta book some profit on that. It pulls back, it makes a low, it does not make a new high. It churns around here a little bit. The 21 EMA catches up, so then you don't have any extension on the 15-minute chart, and then it makes a new high. Now, if you want to, and maybe this is what you did, you could trail to the lowest. You could trail to the last genuine pivot low from when the new high comes in. The last genuine pivot low on this is the 1055 bar low. So the 1055 bar low is 193.44. So what I would like to see from the way you traded this is that you book some profit into the initial up move, so that you're making sure that you don't lose any money on it. Then when you get a new high that comes in, so it confirms that you have a higher low and a higher high, you raise your stop to the higher low. So now your stop is at 193.44. If this thing comes down and stops you out, you make money on the trade because you booked profit at 1-to-1 on your original stop loss, but you're able to raise your stop loss. You could choose to raise your stop to this low for the entirety of the position or just part of the position and leave part of the original stop. Either way, if you're getting stopped out of at least some here and or some at the original low, you end up making money on the trade. And then it looks to me, let me look at the candle again. You were getting stopped out. Oh, maybe it was this candle. So maybe you did trail it right. What's this low here? 193.15 is that low. This low was 193.44. So I want some feedback from you on yeah, under the VWAP with a manual stop. I don't like it. I don't like moving averages for stops. Whether it's a VWAP or an 80 EMA or 21 EMA or 13 EMA or 20 SMA, pick your squiggly line. I do not like moving averages for stops. Moving averages are just averages. They're tools to measure price action. They are not pivots. They're not moving averages are not significant to the stock. They are sometimes self-fulfilling prophecies if there's like an algorithm that's buying on the VWAP or an algorithm that's buying on the ADMA. But I do not like the idea of the manual stop. I do not like the idea of using moving averages to stop. Use pivots as your stops. This is a very appropriate stop off the 1055 pivot low when it actually comes in, when it's confirmed by a new high. Again, you can refer to my game planning class in my training program where I review my 3 rules for how to properly trail stock. So I want to see you getting stopped out of some or all of the position there, and then the remainder of the position, if you have any left, at the original stop. And if you want it to be super greedy, then you're getting stopped out of the entire thing at the original stop for a break-even trade. So I want to see at the end of the day here that this is a trade that you're either break even in or you made money in. But it's because you trailed it right and you had a good game plan. So my compliments on the idea and generally speaking the execution, though I would like to see a little bit better execution. My more feedback on where you could do better is the game planning aspect of the trade after you're in it. So hopefully that helps. CNN is letting us know that credit scores are now falling at the fastest pace since the Great Recession. Sounds bullish to me. See how much we gap up tomorrow. From Varun, are you not worried about the shorts because you're up on most of them and you day trade them so well? So increasing your cost sell short basis. As well as I've been day trading my shorts, I am out of the money on a whole lot of them. Not all of them, but a whole bunch of them. So am I not? And you're saying that I'm not worried about my shorts? I am worried about my shorts. I'm very worried about my shorts. I got shorts on. I'm not short, and I just went over how I think the market's gonna have a parabolic breakout to the upside. So yeah. I hope that helps. um, that's it. Manage your risk. Make sure your tier sizing is appropriate so that you can be able to afford that when and as you potentially need to. So, even my longs or shorts. I mean, I still am long, some Snap, some VAL, some Chevron, but yeah, I don't have a lot of long exposure. Yeah, I'm long oil stocks, right? They don't, those stocks don't go up. Try logging into the YouTube on YouTube, and the web page is not loading for me. I've never swung anything overnight. I have some Qs from 607 today with the risk covered. What are your thoughts on that? Keep it. That's when you want to. That's when you want to swing. Is when you've got a really strong profit cushion while these Qs are continuing here after hours. That's when you want to swing. Is when you have a strong profit cushion. So that's the right idea. I'm either not seeing any commentary in the YouTube or I'm having a problem with the YouTube on my end. Uh, it's just not like fully loading properly for some reason. So if there is commentary in there, uh, I apologize because I can't see it. So I'll have to get you next time. So, so I'm not seeing anything in the VTF anymore. Oh, hold on. I just got it to load. Let me see what's going on in the YouTube. Uh, from Joel in the YouTube. What do you think of Meli? Meli. I don't really ever look at this name because I don't think it's a good trading vehicle, generally speaking. It's just a really expensive stock with really wide spreads, and I don't think it trades great. So that's the first thing I think about Meli. If yeah, I know that's not what you're asking me what I think about the technicals, but the first thing I would say is I just don't think it's a great trading vehicle. You're saying now it typically has almost no volatility, but the last week or so it had a big volatility off some news. I think it's a big overreaction. Yeah, so I actually don't overly follow the stocks. I don't know what the news is. So I don't have good feedback for you on whether the reaction in my mind would be appropriate or not. It is a South American company, and I am also not an expert on the South America trade. I'm not sure where most of their business actually even comes from which country, whether it's Argentina that's having problems or Brazil that's having problems, or kind of take your pick. What I can tell you is that the oversold bounce is very anemic, and that time is bearish in the stock. The more this thing goes sideways down here without bouncing, the higher the likelihood that this actually continues lower. So it still has enough extension right now where you could get this thing to bounce back to 2250 or $2,300. I don't think you can count on anything more than that. And every day that goes by where it does not give that bounce, it has a lower probability of being able to do it, and it has a higher probability of actually continuing down. So I'd be very cautious on that Melly. From AR, I didn't hear the beginning of the meeting. In case you mentioned when you think the government shutdown may have a negative catalyst if it continues. Sure, I didn't mention that in the afternoon meeting today, but I did mention it in the morning meeting. So I think that today is day 8 of the government shutdown. I think we had seen a research note when the shutdown was first starting that basically made the case that the government shutdown can potentially begin to negatively impact the stock market if it persists beyond 2 weeks. So we're not there yet. Um, Pay attention to it, obviously. If we start hitting that point and no deal has gotten done and it's 2 weeks plus, then it could start to negatively impact the stock market. I actually still think that the bigger risk on the government shutdown is still to the upside. I know that the market never went down on the shutdown occurring, but the market can move up on the shutdown ending, which has just been one of these things about how this market has traded since the April low. If anyone remembers the Iran-Israel situation, we never went down on Iran-Israel, but um, we certainly were able to go up when it kind of ended, right? This will be very similar. And it's because we're in this weird environment where implied volatility has moved higher while realized volatility is not. The VIX has moved higher while the market itself hasn't actually been able to go down. So when you get through event risk right now, this happened with Iran Israel, it happened with the last Fed meeting, and it'll happen again with the government shutdown if the government shutdown ends this week. You never go down on any of this stuff, but you will go up on it because when the VIX crunches back down, it creates a Vegas squeeze for the market to the upside, which I think is actually even some of a little bit of what we saw today, right? The VIX gave us a close above 17, and then the VIX traded down all day today, which I think actually helped to be part of the fuel of the fire of the market moving higher. Kind of the tail wagging the dog instead of the dog wagging the tail, if you follow. Um, so yeah. From Kit Kat, Melly is the next ASTS chart wise. I don't see anything that would make you believe that. I don't see anything that would make you believe that at all. These charts are completely different from one another. I'm not against shorts, but I don't get why Derrick has been so keen on hoping any downside moves almost every day, while the SPX has been long trend nonstop since April. I say it every day that the trend is your friend and just come on the way down. So I don't know what else to say about that. I've been a broken record about saying the same thing over and over and over again. The trend is your friend. The trend continues higher. Um, if you want to short, the positioning risk is to the downside. We know that. But you can short on the way down when that positioning risk actually triggers, unless it happens with an overnight move, which is a possibility that triggers everything. And then it might be too late, but you can't count on that either. So, I'm calling out longs all the time, even if I'm not necessarily always taking them myself. I'm calling out longs all the time. So, hope that helps. Uh, other Joel, we had a different Joel as the first question today. But glad to see you both. Um, back over into. Thanks for posting that, Pat. I was able eventually to get it to load. Gap up tomorrow, most likely. Um, and I would also circle back just with what Kit Kat just said. I would also circle back with a lot of what not Joel, Bill K has been saying recently, which is like everybody's saying the same thing. We're in a bubble, but bubbles can last. So it's about balancing the downside positioning risk that exists without missing the upside. And for sure, I could be doing a better job of that myself. Um, so it makes a lot of sense right now to be very long this market, but also long this market and hedged, or to kind of use the Paul Tudor Jones comment that I've repeated a couple times recently. Be long this market to capture that upside, but um, uh, have happy feet and be ready to really flip the switch when and if things eventually trigger. Um, yeah, BKNG's been weak also. Ryan letting us know that Argentina elections are October 26th, and it'll put this at 3,000 or 1,500. Melly. So there you go. If there's election risk, I guess, around Melly, and I don't know the business well enough, but that could affect ARGT. It could affect YPF. Yeah, all of these have not been trading well. GGAL. Uh, sorry, Josh. I'm afraid not. All right, gang. I will wrap it up there with the usual. Have a great night, and I will see you all tomorrow.